Welcome to TradeTheMBI.com. This is John. This report is for the 24th of February. Well, more unease as, the realities of world events as well as just spiraling inflation. We did exactly what we would look for when we have the MBI white spikes. We look for a move to the 0%, which is exactly what finally happened. As long as we maintain that magenta under yellow, it just kept going back and forth, and all those buy the dips resulted in now not just a return back to a low, which theoretically could create a double bottom, if not for the fact that Russia decided to make its incursion, and that has caused a spook. But more likely than not, that's going to generate some buying of the dip within that. So we look for a return back up to that zero level once there's a normalization of things, and that puts it at about the 42.12 range. But now we're looking at a pretty significant dip here. Whether that gets picked up during normal hours, we'll see. But there were always significant situations that we had been watching develop over many months, starting into last year, and those divergence pushes to the upside. This does, however, reduce the odds of a significant rate hike by the Fed, which makes no sense because it doesn't really have any choice but to do that. And if it does do that, it collapses the system anyway, because it can't really afford to pay the higher interest rates on the debt that we've sustained. So, and that's worldwide debt. That is not even necessarily country specific. Here you have, from an NQ standpoint, it was already a lot weaker, never having breached that 50% range. Similar spike here, and then even from the S&P, it's the same situation. When we get that orange caught in between red and cyan on the DOC, that's continuation, and that's maintained itself throughout the dip. What we look for are moves that go under that 7.5, usually create a little bit of a spike, and the question then becomes, you have to see either a reset of steel coming back underneath red, or dipping underneath the zero like it did here. Was pretty reasonable when that orange popped, and that's why we got that brief little move, and it doesn't look like much on there, but these were significant ranges, and the volatility skyrocket is something I had addressed before, discussing that one way to curb exuberance was to create more volatility, because people tend to get frightened in volatility, which in my view is exactly the opposite, because in the volatility, if we know exactly the direction that we're headed, creates great opportunity. I suggested that rates would come down as people flee to quality there. This is just going to keep driving rates up as TLT trades in the inverse of what interest rates do. Euro definitely taking it on, the chin. No surprise there. The reality is the Eurozone is in a world of hurt. This is going to make things a lot worse, because all the sanctions and things that they impose really just do more damage to Europe than Russia. Russia's been dealing with sanctions for so long, and Europe is dependent upon natural gas, oil from Russia, and that, so it's kind of counterproductive in that sense. And no shock here, we promised that gold would continue to rise, and doing just that. Whether oil will continue to staggeringly spike, it's got a pretty strong potential to continue to break out. This is all based on policy. This really has nothing to do with availability and supply. It's just a question of we went from energy dominance, oil exporter, and that to an importer coming up. So that tells you exactly why oil is increasing. No question about that. And again, further confirmation from a Bitcoin standpoint about the use by larger investors as a parking place for funds as opposed to treasuries, and a little bit less so as an inflationary hedge, because the reality is it should be moving in sync with gold, but in fact going just the opposite direction. And again, I talked about this once we had the little spike that moved above into the mid 40s there, that we were coming back down to this range between the 34, 39, and coincidentally, or maybe not so coincidentally, beautifully right in between that spike back up to the 39 and then move back to the 34. The key element here is once you get below there, then we have what we had talked about on the daily charts, which is a move that takes us into mid 20s. And so putting up the daily chart, you see it right here, the next one down into that 28 range. And of course the 0% already exists right there, hovering right around 32.8 range. It's just worth noting. And moving forward, from a 50K standpoint, White led this all the way through, and even on this turnaround again, every time I see those pivots of magenta under 25, I look for price declines, and sure enough, working out beautifully. From a DSC standpoint, we're sort of in a mini pop area right here with this significant dip and the steel moving above 13.5. So probably see some short covering in this pretty significant drop that's already taken place from the pre-market, but we're off the lows significantly. Looking at from what happened in the last day or so, we had that fade off towards the end, and then we began Wednesday's action with a decent pump that had some positive extremes going right back to the beginning of it. We're right about here, and it did not take long for those to fill, and once that started, it just kept going. I mean, we did some beautiful runs that would then eventually catch a little bit of action early on, and just a complete failure. DOC steel for a reset, meaning coming back underneath red or dipping all the way underneath towards that one area. It didn't happen until literally we saw strong P2 pivot coming forward there, and DOC rising up towards that negative 7.5, and that's usually enough catalyst. Even that, though, is still took a little while before it finally caught strength, and that was that pivot right here of the magenta on the MBI. When it gets back above yellow, it was starting to cascade, so that was even weakness right there, but then as soon as it pivoted up, that led to a little mini charge that took up price to the 100% from declining significantly 100%, but it just created sell catalysts, and we just continued to fade from there. And so all in all, that was just pretty clean, and every little pop that did generate, we were not even getting to the 38% levels, so we were tiny pop to above the 23s and that, but then it would just generate and turn around into a new sell. And I don't mind that, because we see it pretty clearly when we end up with the buy configurations and then a turnaround sell that happens pretty close to equal to where it began. Usually in this case it was right around that 23%, and that left for some really solid moves, and then this begins the post-market. So to give you an idea, that's what we were seeing for some of the light days. So this is already pre-market with quite a while before U.S. futures even open. So that's going to show you how active the regular session is going to be. So it should be some exciting action. As always, though, I'll continue to update you on the Skype chat. Trade well. We'll talk to you later.